Welcome back, Johnny here, and in today's video I want to talk to you guys about penny stocks. Now there are 3 penny stocks that I have in mind for today's video, as well as a few penny stocks I'll go over in my portfolio that I own right now. So alright, let's go ahead and get into it. Now the first penny stock I want to look at is going to be Zynga, or ZNGA. Now Zynga is a pretty cool company. It provides social game services. It develops, markets, and operates social games. You guys have probably played a lot of apps on your phone that Zynga has made. Not a bad little company. Started in 2007. Their PE ratio is pretty high for my liking at 77. They have a $3.27 billion market cap, which is actually pretty nice, and their average volume is about 10 million. So they actually employ 1,500 employees, which is really good. Right now their stock price is $3.85. Collections are video games, most popular under 25, 100 most popular, and that's a really hard tag to get onto, 100 most popular, since there's like thousands and thousands of stocks. So pretty cool. It's 57% higher right now than the average price. That's good. It's showing strong growth. 53% out of the 15 rating is saying that it's a buy, and 40% out of the 15 rating is saying it's a hold. So that's good. Buy, hold, whatever you want to do. Buy some more when it drops a little. Now their estimated earnings per share is 3 cents per share. The actual, it will be available today after hours, so I will kind of let you know what happens there in another video. But it looks like we're going to be, I'm hoping a little bit strong. It's showing good growth here. Revenue in their company is looking pretty good. If you go over to the street report, it's basically saying to hold right now, that their price range is right around $4.21. It is a C plus as a hold, just barely missed the rating for a buy. They do have some strong growth. Some of their highlights basically are Zynga Inc. turned its bottom line around by earning 3 cents per share versus negative 13 cents in the prior year. That's pretty good, and they're expected to improve that from 3 to 16 cents per share in the future. Also, their net income increased 159% compared to the same quarter last year, rising from negative 9 million to a positive of 5.6 million in net income. So they finally hit that threshold. I've been watching Zynga for some time now. They had a negative earnings for quite a while. They had a negative earnings, and they finally broke through. I did own it back at 352, 383, sold at 420 when it was nice and high. But other than that, guys, I do strongly believe that Zynga is a good penny stock to get involved with. Pretty soon it won't even be classified as a penny stock. I think once it goes past, like, I think $5 or $10. Their net income right now is $41 million, in net sales $875 million in sales. So I mean, they're doing good. Their factors for growth is 3.5 out of 5. Total return 3.5 out of 5. Efficiency is 2 out of 5. Price volatility is 4.5 out of 5. Solvency is 1.5 out of 5. So I mean, as you can see, guys, it's still a pretty good company to get involved with. I have no problem buying a few shares of this. Probably on Friday is when I'll be doing that. And so that's about it on Zynga. Moving on from Zynga, let's go ahead and go to the next stock, PDLI. PDLI is another strong company to get involved with. PDL Biopharma. Basically, their share price is at $2.52 right now. Their one-year growth is up 12%. Now, Biopharma Inc. produces and markets biopharmaceutical products. It operates through the following segments: income-generating assets, pharmaceuticals, and medical devices. So this company was founded in 1986. It is a little bit of an older company. They're headquartered in Nevada. Their PE ratio is what I like to see. It's only at a 3.65. They have a market cap of $382 million, and they employ 87 people. Their average volume is at 1.68 million. And their collections right now is finance, health, pharmaceutical, investment services, biopharmaceutical, and biotechnology. They're 9% lower right now, so there is an opportunity to buy. The average price paid is around $2.77. They do have a weird little hump going on. They were at negative earnings, and then they went to positive earnings. They got up to $26 per share, or 26 cents per share, sorry. And it looks like now their estimated earnings won't be available till August 8th. They don't have anything here for estimated earnings. So again, be cautious. Any penny stock, you should be very cautious with it. Again, I think that it's a good buy. PDL is saying to hold on the street rating report with a price target of 260. So there is some room to move. Now, I would be very cautious with this. Some of their highlights might not be as great. Their debt to equity ratio is very low at only a 0.14, which is good. It looks like currently their gross profit margin is a little high at 60.39%. Despite the high margins, it looks like it's decreased significantly the past last year. So hopefully it won't taper off too much. Hopefully it'll come back. This is just something that I'm watching right now. Their net income significantly decreased by 77%, falling from $7.24 million to $1.6 million. Now, I'm wondering if maybe they'll come back from this, maybe have some new research, new products coming out. Their net operation flow decreased to negative $13.52 million, or 129%. So this might not be a good company to really get involved with, but it is a penny stock that some people were asking me about. As you can see here, their growth is 0.5 out of 5, total return 1.5 out of 5, efficiency 4.5 out of 5, price volatility 1 out of 5, solvency 1 out of 5, and income 0.5 out of 5. So this is a really low grade stock right now. I would be cautious if you were looking into getting PDL. So let's go ahead and move on. Another company that is doing okay, that I've had my eye on for a little while, would be AKS, or AK Steel. They're a steel manufacturing and metal company. Basically, they've been around since 1993. No PE ratio at the moment or dividend, but they do employ 9,200 people. So it is a massive company at $1.46 billion market cap. A little bit popular on the one side. Looks like 33% of analysts agree to buy this. 7,500 people do own this on Robinhood, and it doesn't look like it's too bad of a company. 16 million, in average volume. 13% lower right now, so there is a small opportunity to buy. I do believe that this company has its perks and problems, but it also has its good things. Its estimated earnings was at 20 cents per share. They just missed it, guys, just barely by 2 cents. Some people will say, oh, they missed their earnings, so I'm going to jack it up, or I'm going to sell it because it's not going to go up. So I believe that this company is still going to go up. They have a lot of earnings per share right now, even at 18 cents. That's still really good. I bought this company in the past at $4.83, and I sold it for a small loss at $4.36. Not a big deal. I know the street is saying it's a sell. They're actually rating it a D, so I'd be very cautious with this company. I might not necessarily, I'm not going to buy it, but I'll be watching it. And a lot of these penny stocks, you do want to watch for opportunities to buy in any kind of news or new developments. Now, their net income has significantly decreased by 54%. Now, they're still making money. They're not making $62 million, but they're still making $28 million per year. That's not too bad. It's currently extremely low, it says. Let's see, I can't make this bigger, but anyways, basically extremely low at 12.51% is their gross profit margin. Their net profit margin of 1.73 significantly trails the industry's average, so it is really low in its profits. I mean, they're still doing okay. They have a estimate of making 76 cents per share versus only 2 cents per share in the coming year. Again, their factor growth 1.5 out of 5, total return 2 out of 5, efficiency 1.5 out of 5, price volatility 2.5 out of 5, and solvency and income are at 0.5 out of 5. So again, guys, be very cautious when buying and trading penny stocks. But I know there has been some people asking me to do a video about penny stocks. I wouldn't necessarily trade any of the three I talked about except for Zynga, ZGAN. They do have a nice profit of EPS, and they have a lot of money coming in. They also have a strong growth going up, whereas AKS and PDLI are kind of like slowly descending down, I would say, or almost becoming stagnant. So again, just do your research, guys. A couple companies that I am involved in for penny stocks. Go ahead and start off would be Pacific Coast Oil Trust, or ROYT. For $2.50, you could own this stock right now. It does have a very downward trend, but in the last year, it's been up 66%. Not too bad. Definitely a good company to invest in. Of course, everyone knows, when you say Pacific Coast Oil Trust, what do you hear? You hear oil, oil units, wells, all kinds of different things. They were founded in 2012. They're headquartered in Texas. They do pay a nice dividend. That's what I like about this company. They pay a 7% dividend yield. Their PE ratio is super low at a 13, and they have $97 million, almost going to $1 billion market cap. So average volume is 162,000. That's not too bad. 10% higher right now to buy it than average price, which is good. And their expected earnings is 4 cents per share. We'll see the actual earnings expected today sometime. I'm not too sure. It could go both ways, but I've been hearing some pretty decent stuff about ROYT. I bought it in the past, 3 shares at 202. It's out at 250, and then I had bought one at 234. I've gotten a dividend from it June 25th for 6 cents, so they do pay a nice dividend. The other company that I am invested in that is a penny stock, considered to be a penny stock, would be XXII. This is also only a $2.48 stock. It's 22nd Century Group. It's under the 100 most popular, and 37,000 people own this company, so it's very popular. Basically, they engage in increasing and decreasing levels of nicotine or cannabinoids in cannabis plants. So they employ almost 80 people, $310 million market cap, no PE or dividend ratio at this time. Average volume is 3.11 million, which is very high. It's very popular to trade. 0% lower right now, so it looks like it's an average price if you bought in today. Their estimated earnings isn't showing right now, but it looks like they are positive from last quarter over about 2 cents, 2 or 3 cents. So this is one of the companies that I've invested in, put a couple extra shares. I'll sell a couple if it goes up. I'll buy a couple if it goes down. It just kind of depends. I wouldn't necessarily, Sprint is classified as a penny stock, but again, it is only a $5 stock. Maybe it was considered a penny stock in the past before it passed its threshold, and it kind of looks like it goes back and forth on the 5-year between a penny stock at 285 to a decent stock at 930, back down to a penny stock. So there's a lot of volatility on this company. Everyone knows what Sprint is and what Sprint does. They're a telecommunications service. They have a low PE ratio of a 3 and a market cap of $21 billion. They employ 30,000 people, and they have a nice average volume of 14 million. Now, they don't pay a dividend at the moment, but you could buy this company right now for 9% lower than the average price. A lot of people are saying to hold on to this company right now, and they have an actual earnings per share of 4 cents per share. I love profits on your earnings per share. I will never invest in a company with negative earnings per share. Never. I will never do that. That's just one of my rules. And I will never invest in a company that has a PE ratio of higher than like 40 or 50. I just will not do it. That's too expensive. Some recent trades: market sell at 825, market sell 641, market buy at 555. I believe Sprint is one of those shares you can get for free using the Robinhood app referral program, so that's probably why you've seen some sold off. If you guys like this video, leave me a comment, like that, smash the like button. Just let me know that you like these videos. It really helps me to keep making them. I like making them, and I want to make sure that you guys like watching them. So if you do, also leave me a comment about what videos you want to watch. Let me know. I'll do more videos on Siri or BBD, Glad, Ford. I'll do videos on anything, on stocks. Want me to do stuff on crypto? I can. I'm somewhat involved on crypto in Coinbase, but I've still trying to been making kind of time and a good kind of video to broadcast my crypto trading. So guys, if you like this video, please, again, smash that like button, comment, and subscribe to my channel, guys. Lots and lots more content coming. Every day I get a little bit better at these videos just through practicing. And I'm looking forward to seeing you guys another day. All right, bye.